Hello everybody, welcome to my YouTube channel. I am the Chartist, and today we had another green day for the SPY, as you can see. Now, I mentioned yesterday we got to go through levels. There are levels to this. Alright, because SPY like to take the stairways up and the elevator down, the good old cliche saying. Alright, now these moving averages were our stairs. Okay, the first one on this day was the 5-day moving average. And SPY yesterday got above the 5-day moving average and the 50-day moving average. So I said we need to see the next level get taken out and a close above it, which is the 13-day moving average right here, this green line. We got it. We got the green day and the close above the next resistant level. Now when we take out a resistant level, that now becomes the support level, okay? So we got another level because bulls are not out of this just yet, okay? The bears have a chance to still take this down another leg further, okay? They can still have a chance to continue this correction and make it go deeper. Why? Because we are still trading below the 20-day moving average, all right? 446 to the 447 range is very critical, very critical. If we can close above 447, preferably at 448, that's a very, very good sign. A very bullish sign. Take it, guys, as a very bullish sign that we could head up to a new all-time high and touch this resistant level. Okay, there's still a lot of area of liquidity above this resistant level that market makers did not use just yet. Okay? The market makers did not use this resistant level or the areas of liquidity that is above it, the AOL. Which means the next price target, if we get that close above this 20-day moving average, will be up here around above 460, 462. Okay? But like I said, that 20-day moving average that is between 446 and 447 right now is very critical. Very critical. Now, if you're a bear, and I don't recommend to be a bear, but if you're a bear, you want to short or buy puts or whatever your strategy is to bet to the downside at resistant level. Just like if you were a bull, you want to do your best to enter around support level or the AOLs. Okay? So if you're a bear, 446 to 447 is where you might want to enter your short position. 446.44 is where the 20-day moving average is, to be exact. Okay? But if we get that break above, very bullish, okay? So we take a look at the VIX that inverses the SPY 75 to 78% of the time. Please Google that. The VIX is trading below all moving averages again. As you can see, VIX is showing us bearish price action, and as of right now, we have this strong support level down here at 1615, right over here. You see, we got multiple touches, 1, 2, 3, and I think we're gonna go for that fourth touch. And as long as VIX is bearish and we're going for that fourth touch down here, that's another $1.50 drop. SPY has another shot to go test this resistant level right here, which is another $2-3. Okay? Now, I'm thinking, if we see the VIX break below 1615, 1618, break this support level, and continues further down, that will be a good sign that SPY will be heading up to our next price target above 460, 461. Alright? So that is the scenarios that I'm watching for, guys. Okay, this is what technical analysis for. It's not a crystal ball. I'm not predicting anything. I'm just watching out for the scenarios. Kind of like a game of chess. There's only so many moves that your opponent can make against you. Whether it's with the horse piece, the rook, the bishop, even with the queen. Okay? There's only so many moves that your opponent can do to you, use against you in chess. You can't predict their movements, but you can anticipate their movements and prepare yourself. Okay? That's what technical analysis is about. It's anticipating the different scenarios. Our bearish scenario, we have two bearish scenarios. One, we get a rejection up here and we fail to break above, or we break back below this support level. Okay? This support level is around 441, 442. If SPY starts breaking below that, we could see a deeper correction. Okay? If SPY continues to struggle to break above that, that's a critical resistance. It's most likely a sign that we're going to see more downside. Okay? That's my bearish scenario. My bullish scenario is we continue to stay above the support level and continue to creep up, or we just break this 20-day moving average and get back above all the moving averages. Okay? So, with that being said, based on the combination of the VIX and the price action, the overall price action of the SPY, because this is an overall bull market, and this looked like two false breakdowns. Area of liquidity got taken out. I'm bullish, guys. We had another green day today. Okay? I think we'll get another green day Monday to test this resistance level. Now, from there, we'll see what happens. Okay? So, for now, short term, bullish on the SPY. Moving on to QQQ. Had this false breakdown over here this past week. It got back up. That's how I know it's a false breakdown. Now, we still got the 13-day over here at 374.33 and the 20-day critical resistance level 376.36. Okay? So this right here, you got the high of this candle at 374.04 and the low is at 370.10. Okay, now this right here, the high is 373.76 and the low is 370.27. That means what we have here is an inside day trade setup. Okay, have you watched my previous videos? I think a few videos ago, I can't remember exactly. Definitely check out my channel. But I talked about a little bit about the inside day candle. Okay, now this is the mother candle and this is the child candle. This is the child candle because it's trading within the range of the previous candle. To me, this is a bullish inside day candle because look at that body. Okay, but still it qualifies because it's still within this range. Now, the way you trade inside day candles, you watch for the third candle to break the high of the mother candle or the low of the mother candle. So if you see QQQ on Monday breaking above, what's this, 374.04. If you see QQQ breaking above 374.04, most likely we're going to head up higher and test 376 or maybe even go higher to our next price target around 387. Okay? But if you see QQQ, this third candle breaking the low of the mother candle, which is at 370.10, it's most likely we head down lower, down to 368 or maybe lower for a deeper correction. Okay? So, inside day candle is mostly a sign of consolidation, sideways price action. You can also get a double inside day candle where this is the child candle, but then the third candle, it's also the trade within the range of this. So you get a double inside day candle. All right. If you think about it, it's like a triangle pattern, a symmetric triangle pattern. Not always perfect, right? But that's how you trade an inside day candle. Watch for the mother day candle, the range of the mother day candle to get broken. Whatever range gets broken, that's where you bet to the to. So if it breaks the high, you bet to the upside. If it breaks the low, you bet to the downside. Okay, and of course, manage your risk. Okay, I can help with entry. You gotta figure out the risk part, your exit. Okay, because everybody's risk tolerance is different. Okay, so moving on to Tesla. Now Tesla, we had this bull flag, and today it broke above the bull flag. Okay, now be very careful with Tesla, trading Tesla, because not only did Cathie Wood earlier this month sold a bunch of her shares and waiting for a better opportunity to buy in, follow the smart money. But I believe that Tesla is following Wyckoff's accumulation. Okay, now the high of phase B is still up here at 781.31. Okay, I'm gonna show you the schematic. Okay, so this was phase B. This is a high of phase B, and we should get a second high in phase B, which is technically gonna be lower than the first high. So we check Tesla. Technically speaking, we got a big green day today, but it's still lower than the high of phase B. So we're still in phase B, and right now it's still on track with Wyckoff's accumulation. All right, so to be very careful. If you're a bull at these levels, be very careful. Okay, even if you look at the with the moving average, because technically speaking, there's this a bull trend, but even with the moving average, it's pretty extended. You got Tesla above the upper Bollinger Band. Is pretty far from the 5-day, 13 and 20-day moving average, okay? Because we had a very volatile green day. It was really good if you're a bull, awesome. But be very careful, guys, because this is the levels where whales are looking to sell to retail traders, getting them and tricking them thinking, oh, this bull market is going to go forever. And that's when they pull the rug on us. So be very careful. Risk is high. I'm not saying you can't trade Tesla or anything. That's on you. I'm just saying the risk is high for Tesla. You're either going to make a lot of money with this stock or you're going to lose a lot of money. So be very careful, okay? Remember, I believe it's falling wick off. I believe we're over here in the middle of phase B. I would much rather wait for a better buying opportunity, okay? We can go all the way down to this spring, or if we're following accumulation number 2, it won't be as deep of a sell-off, but there's still a sell-off. It's from here all the way down to here for the last point of supply, okay? So I'm gonna say it again, especially at these levels, I am bearish on Tesla, okay? It doesn't mean I'm buying puts or anything. I'm just, I feel like there's a better opportunity in the future to buy Tesla, but it remains to be seen. The best way to the thing that can cancel the wick off right now is if Tesla breaks above 781.31 and actually close above it, because then it will no longer follow wick off. All right, so there it is. I am bearish on Tesla, so be careful, guys. This is a very volatile stock. It's not one of my favorite stocks to trade, but I just felt like I wanted to cover it because I think it's so interesting how it's so accurate with Wickoff's accumulation. So I'm just watching this with you guys on the sideline, just watching it. Okay? Speaking of on the sidelines and last point of supply, now I'm not on the sideline with this. I'm actually buying, okay, because I believe in Bitcoin. It's also following Wickoff's accumulation. Only I believe it's more further along around here in phase D. I think we're at the last point of supply. Okay, here's the AR level right here, and phase D is supposed to drop down close to the AR level, and Bitcoin actually dropped, or even lower than that, down to 39.5K. All right, so keep in mind, it's not going to be 100% accurate. It's more like a general idea of what the market or the price action could be. All right, so we thought it would be choppy around this level. Okay, we could see a recovery where it's a lower high and then a higher low. You get choppy before we make a big move, okay? So it could take time, okay? Wickoff could take time. Wickoff could take months. It could take years. But I believe we're around this area, and we could see more upside, okay? Before we head into phase E. Okay? That's what I believe, and that's what I'm seeing. Alright, so bottom line, I'm bullish on Bitcoin. I think it's a buy the dip opportunity with all this FUD. But whatever y'all choose to do, make sure you do your research. Good luck. I mostly base my trades on technical analysis. This is how I do it. And I hope I was able to help you guys. Stay calm, gain some insight in this crazy market. And I'll see you soon.